Hey everyone, welcome to the trading floor's 25 days of Tradesmas. Make sure you stick around to the end of this video to find out how you can win $1,000.
Oh, hello everyone, welcome. My name is Karl and I'm from the trading floor, and happy Tradesmas everyone. So I'm here to break down one of my counter trend trades, which is counter to higher time frame move, and we will dive deeper now and see what made me make the decision to go short here. So as you can see, it's a fairly recent trade, so I want to get all my thoughts and ideas. Okay, so first looking at the dollar index, and you can see I have a little bit of notes in here. I highly encourage everyone to kind of make these kind of notes on the charts. So as you can see, the dollar index on the daily has started retracing. Previous week's low is still intact. We have a weekly inversion fair gap, daily volume imbalance. So we can see that the dollar going lower or retracement, at least up to first BC low. That's my, how to say, my prediction for dollar short term. As you can see, that has been hit nicely. So ideally, if the dollar is going lower, we should see indices going higher. Okay, so already that idea indicates that my short is kind of counter trend if we consider that just spoke about the dollar. So here's the daily and here's the 15. So as you can see, steadily lower, a little bit of ranging, and then steadily lower. Now let's take a look at the last stack. So let's check the daily. Let's see. And again, little notes here. Nothing really serious. I'm gonna remove the excuses for now. Executions, and as you can see, we have a daily CP and a really small volume imbalance between these two. Now dollar going lower should mean that the indice should start going higher, right? So that's why I have marked the here, and I have previous week's low as well. I know there's a lot of markups in here right now. It's hard to tell what is what, but we'll get to that. So again, from last week or election, we have this busy still that has a little portion open here. We got a really nice retracement into it, and I really like that. So jump straight to the 60 minutes. And as you can see, after the large displacement, price has been retracing higher. Combining that with the dollar going lower, we should have a really clean scenario as to going long or in the Nasdaq, and banking it on the fact that the dollar is going to go lower. Okay, so 15 minutes. This is where we have all the Tracy markups. So as you can see, 830 New York low, the sell side, and we have 930 low sell side. A couple with an opening range gap low, opening range gap high, and continuing encroachment of the opening range gap. As you can see, we have kept the discount, and this is our discount array where we will be interested in getting long. However, I made the trade go lower into said discount, which was a little bit more high risk, you could say, but I was fine taking the trade. So this is what the 50-minute looks like. We have a 50-minute premium equal, as you can see, relatively equal highs. We have high here, relatively equal highs on the buy side. 50-minute daily breaker. Let's go to encroachment here. We have daily breaker high, daily breaker low as the lines. So this will be a perfect place to target and expect a bounce in price. Okay, so quickly a 5 minutes. So as you can see, pretty much the same as the 15. A little bit more detailed here. Again, relatively equal highs. Price goes higher, doesn't take out the highs here, so price is still bearish on the 5 minutes. Since we have not broken the market structure to the upside, we are still looking for lower prices overall, at least on the intraday on the Nasdaq. So overall, as considering for the higher time frame and even the 15-minute time frame, is a counter trend to that. So as you can see here, price started displacing after first trading into the 15-minute busy, and the daily breaker comes with approachment. So price started displacing. So we have a market structure shift bullish here with a fair value gap. So that's a unicorn right here. Makes people go long, right? So if anyone went long here or here, well, here you didn't get a tag, but here and here, you had a pretty nice trade or a low hanging fruit here. And since you didn't take out the range high, the dealing range high, so this is dealing range high, and this is the low. We didn't take out the low, so we are still in the same dealing range. Price starts rejecting. So the first real fair value gap together with the volume imbalance here. Maybe I can make a box here quickly, like so. I'll leave it white. Now this box here is the inversion fair value gap. So as price drops through that, that's going to be our indication that we have a change in the state of delivery happening right here with this inversion. Unfortunately, price does not come back up fully in here, creates a small sib in here, starts rejecting, So this was the ideal first entry point here. However, I did not take that. I was waiting for all of these to fail and possibly make it lower into the discount on the 15 minute. So more inside the 15 minute busy, that's in discount. So as I saw these bullish fair value gaps fail and become inversion fair value gaps, I was waiting for a bearish displacement. So I got that bearish displacement through the daily busy. That's a really light green here. So this is its middle line. Price displaced through that, created a CB just below that conflict encroachment level. And this is important, and it displaced through previous bullish order block. So I'm going to remove this now, and I used the previous bullish order block as an inversion bearish order block now. Okay, so the bullish order block turned to bearish order block, so that's why it's tagged as IOB, inversion order block. So using that as a confluence with the displacement lower, a shifting market structure also breaks the low here with a fair value gap. So the real change in the state of delivery, looking for lower prices here. Not really afraid that it's going to instantly run against me. And taking an entry from the CB low in here. The original stop loss was 11.75 points. The stop loss was right above the fair value gaps candles high. I had it trimmed down because after the first partial, I trimmed the stop loss by 50% in this particular trade. So the price comes up. So I'm in the middle as well. Price trades into the CB. Price tries to come above the CB. It does create a mohawk in here. Intermediate term high. In terms of market structure here, price closes below continuous encroachment, and as I teach, that is extremely bearish for the price. That's a bearish sign. So I was confident in the short. So first partial here below the low, obviously for the sell side. Daily breaker, continuous encroachment as well. So first partial got hit pretty quickly, and then price starts stalling around. Remove this here. Small volume balance here. Price trades into here, goes down one more time, taking a partial here, and then eventually price started running against me. So that is pretty much it for the trade. Let me show you the executions as well. So as you can see, I'm getting short here for 19 micros at 20,000, and ZEC partial taken for 6 contracts at 20,592.75. And as price ran against me, the stop loss moved to break even. The last remaining 4 contracts were closed in at 20,615.5. So if you want to learn from me or the way that I see the marketplace, how I trade, if that is of any of your interest, please check out the trading floor. So thank you, and see you in the next video.
Thanks for sticking around to the end. To be eligible for the free $1,000 giveaway, you just have to be able to receive a PayPal payment. To enter, like and comment below, and come back tomorrow for another video and another chance to enter.